Hi, welcome to another episode of We Gonna Make It podcast. Today we'll be discussing the recent move by the Indian government to impose money laundering provisions on cryptocurrencies and virtual assets. This is a significant step towards tightening the oversight of digital assets in the country. In a recent Gazette notification, the Finance Ministry stated that anti-money laundering legislation has been applied to crypto trading, safekeeping, and other related financial services. As a result, Indian crypto exchanges will have to report suspicious activity to the Financial Intelligence Unit in India. This move is in line with the global trend of requiring digital asset platforms to follow anti-money laundering standards similar to those followed by other regulated entities like banks and stockbrokers. Over the last few years, digital currencies and assets like NFTs have gained traction globally, and trading in these assets has increased manifold with cryptocurrency exchanges being launched. However, India till last year did not have a clear policy on either regulating or taxing such asset classes. The Gazette notification now defines virtual digital assets as any code or number or token generated through cryptographic means with the promise or representation of having inherent value. This includes exchange of VDA and fiat currencies, exchange between one or more forms of VDA, transfer of VDAs, safekeeping or administration of VDAs, or instrument enabling control over VDAs, and participation in and provision of financial services related to the issuer's offer and sale of these assets. Crypto assets are by definition borderless and require international collaboration to prevent regulatory arbitrage. Therefore, any legislation for regulation or for banning can be effective only if significant international collaboration on the evaluation of risks and benefits and evaluation of common taxonomy and standards are met. Last month, Finance Minister Nirmala Sitharaman told Parliament that India was discussing with the G20 member countries the need to develop a standard protocol for regulating crypto assets. She emphasized the need for significant international collaboration for any specific legislation on these sectors to be fully effective. In the budget for 2023, the Finance Minister had brought 30% tax on income from transaction in such assets. Also, to bring such assets under the tax net, she introduced 1% TDS tax deducted at source on transactions in which asset classes above a certain threshold. Gifts in crypto and digital assets were also taxed simultaneously. This move by the Indian government will help in bringing greater transparency and accountability in the digital asset market. With the imposition of money laundering provisions on cryptocurrencies or virtual assets, the Indian government is taking a step towards ensuring that digital asset market is regulated and safe for investors. That's all for today's We're Gonna Make It podcast show. Thanks for tuning in and see you next time.